Sarjeet, Akhil, good to have you guys on the show and really appreciate you taking the time out and joining us today. Well, that's the big one awaited, Bharti Infratel. In fact, let's take this discussion forward and let's bring on board Rumit Dugar, Telecom Analyst at Religare Capital. Rumit, hi. You've advised subscribing at mid to lower end when it comes to Bharti Infratel. That's also what we've seen from anchor investors, that no demand at the upper band. What valuations would you be comfortable at?
So, as you rightly said, we recommended at the lower to middle band, and at that pricing, the valuation is more at close to 10.5 times EV/EBITDA, which we think is reasonable. I think investors in India would also look at it like a utility. Stable cash generation. So if you look at some of the utility stocks, they trade at about 10 to 10.5 times EV/EBITDA. The ROEs are obviously lower than some of the utilities. But that said, I think longer term growth prospects are good. It is trading at a discount to global peers. So I think at those valuations, there is still some upside left for the investors.
But is it fair to compare Bharti Infratel with global peers? Because globally the telecom environment is separate, the data usage is separate, and the tenancy ratios are also different?
Yeah, you're right. I think from business model perspective, obviously you can compare the tower companies, but clearly the environment is different. We have massive overcapacity in the tower industry in India. If you look at the capacity utilization is hardly 50-60%, because on an average towers can accommodate about 4 to 5 tenancies, and Bharti Infratel is close to 1.9. So, and they are one of the highest. So clearly capacity utilization is an issue. Secondly, you don't have zoning requirements, etc. in India, which has primarily led to a lot of tower coming up. That said, I think data is still an opportunity for the Indian players. The data penetration is very low as compared to global peers. But I think data is going to be more of a long-term story, and I think the next maybe 12 months, that is not going to be a big driver for growth. So I think near term the upside might be limited, but longer term I think you could see if the demand does pick up and data does pick up, you could see some improvement in ROEs and possibly some multiple re-rating, but not at this stage.
Right. So what kind of, growth are you expecting the company to register in the next, say, couple of years? I mean, can we see significant margin expansion from here onwards? And would you agree that increase in tenancies will drive growth in the near term, while it rather the growth in 3G and 4G is going to drive the growth in the medium term?
See, I think we need to understand what is going to drive the increase in tenancy, and if you look at it, the key driver for tenancy are typically coverage expansion, which obviously is not happening, and most of the operators have a pretty decent coverage. The second driver for tenancy is new operators, and clearly that's not the case in India. Thirdly, it's increase in capacity or increase in volumes on the voice side, and that might be a bit of a challenge, because going forward, if you get into a tariff inflationary environment where actually operators take up tariffs and anyways volume growth is kind of slowing down, so that as a key driver for growth is not going to be there. So I think the near term growth outlook is going to be slightly muted, but data and 3G and 4G, I think over the next couple of years could become an additional growth driver. But I think over the next 12 months, I don't think you're going to see a significant outperformance in growth, and I think they should grow broadly in line with the industry.
Rumit, so final question, what is the bottom line here? For someone who is watching this show, should they only buy the Bharti Infratel IPO if they have appetite to hold on to this stock for next 6 months, if not 6 months, at least for 12 months? And if you don't have that kind of impatience, avoid this one?
Yeah, I would say that, I mean, if your valuation band is closer to 220, 230, maybe I don't think there is too much upside left for the investors, and I don't think you're going to see a big listing gain for your retail investor audience.
Okay, good having you on the show, Rumit. Thanks as always for taking the time out. Let's see what the market is up to. Still going good. In fact, if nothing, we're picking up more and more weight. 59.60 is where the market is right now. Mitesh,